Now, Treasury Secretary Steven Kennedy has painted a grim economic warning during Senate estimates this morning. Have a look.
The contribution of household consumption to economic growth was the weakest it has been in the past decade outside of the pandemic. The run of recent weak retail trade data suggests consumption is expected to remain subdued into the first half of this calendar year as households continue to prioritise essential spending. More broadly, we expect activity to be very weak in the March quarter GDP.
All right, let's bring in now MacroBusiness Chief Economist Leith van Onselen. Leith, thank you again for your time. Look, this was a very grim outlook from the Treasury Secretary.
Yeah, it was. And what it showed, Sharri, is that the Reserve Bank of Australia is basically caught in a bind as it tries to balance stubborn inflation with the deteriorating economy. So we obviously know last week's April CPI indicator was, too high, which would have irritated the Reserve Bank. But at the same time, we've got the consumer economy collapsing. So last week we saw the softest annual retail sales growth in more than 3 decades outside of the pandemic, despite the strongest population growth in around 70 years. And this week we're likely to see the Q1 national accounts record the lowest annual GDP growth outside of the pandemic since the early 90s recession, despite 70-year high population growth. So the reality is that the per capita economy is collapsing, Sharri, driven by the household sector. Households have been smashed by, falling consumption spending, rising unemployment, etc. And what this tells you is that interest rates are going to remain on hold for, the foreseeable future.
Yeah, it seems like a rate cut that many were expecting later this year is diminishing. Now, 2.6 million Australians are set for a pay rise in July, this after the Fair Work Commission lifted the minimum award wages by 3.75%. Now, this is currently, Leith, higher than inflation. Are you concerned, that these wage rises, they are needed, but are you concerned they will push inflation up further?
Yeah, look, the short answer to that is no, not at that level. I think the Fair Work Commission decision was actually sensible and pretty measured. Look, the 3.75% rise in the minimum award wages was obviously well below last year's, which was 5.75%. And I think, if anything, it should be neutral to potentially disinflationary. And it's worth pointing out that Westpac today lowered its forecast for wage growth to just 3% by the end of this year, based on the Fair Work Commission's decision. And we've also got to bear in mind that obviously the labour market's weakening. We've got the unemployment, underemployment rates are rising. Labour supply through immigration is growing much faster than jobs can be created. And as a result, wage growth is going to fall through the year anyway.
All right, Leith van Onselen, thank you very much for your time tonight.